Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for making time today.
Good afternoon, Devin.
Well, let's start with the BOK and that interest rate hike of 50 basis points. The base rate now at 3%. This is the highest it's been since 2012. What do you make of the BOK's decision?
Bank of Korea has made another big step rate hike, or 0.5% hike today. So the base rate of Bank of Korea became 3% from previous 2.5%. Bank of Korea's big step today has been actually pretty much expected because the Korean economy is suffering from record high inflation, skyrocketing $1 exchange rate, and capital outflow. It is the first time in about 10 years that the base rate has risen to 3% range. Today's rate increase marked the 8th rate hike by accumulated 2.5% since August last year, when Bank of Korea began raising the key interest rate that has stayed at a record low to shore up the pandemic hit Korean economy. Thanks to rapid interest rate hikes, fears are rising as high interest rate result in deepening financial burden on indebted households, raising the possibility of those without deep pockets defaulting on their borrowing and undercutting their spending.
Right. Korea does have a very high level of household debt. Well, concerns over a recession in the U.S. sent stocks lower for the most part overnight on Wall Street. The Dow was in positive territory, but just barely. It was the 5th decline in a row for the S&P and the Nasdaq. What's the story in the global equity markets?
In U.S. market, the S&P 500 and Nasdaq composite fell Tuesday in volatile trading, upended by Bank of England's Governor Andrew Bailey's remark that the Bank of England's plan to rescue pension funds hit by interest rate increase will end as scheduled on Friday. Mr. Bailey's comments were taken as a negative on Wall Street because they raised the prospects of further asset sales by UK pension funds in the face of large interest rate increases. The Nasdaq composite slipped into a bear market. Its second of the year. The S&P 500 and Dow are already in bear markets, which is defined in Wall Street language as a decline of 20% or more from the recent peak of the market. Finally, the S&P 500 fell 0.7%. The Nasdaq fell 1.1% on Tuesday. The Dow Jones Industrial Average edged up 0.1%, which was aided by the big gains in big biotech, Amgen's 5.7% gain. In Japan, the Nikkei 225 stayed almost flat today. Hong Kong's Hang Seng closed 0.3% lower, but Shanghai index gained 1.2% as of 3 p.m. in Seoul time.
Well, here in Korea, Professor, stocks started out lower, but by midday they were up. Gains for chipmakers, steel, electronics, LG Energy Solution, though, leading the declines. Game maker Netmarble down almost 9% on disappointing earnings. Tell us about the domestic market.
Along with Bank of Korea's interest rate hikes today, the domestic market expanded because the higher base rate by 0.5% is already reflected to the market previously. However, there comes more chances of market drops as Korean and U.S. central banks are raising the base rate further by the end of this year. The benchmark Kospi advanced 0.5% and Kosdaq also rose 0.3%. In Kospi market, one unusual pattern today was foreign investors net bought stocks up to 238 billion won in a narrow trading. Most of top 20 large cap stocks gained today. Samsung Electronics rose 0.7%, but the second largest capital, LG Energy Solution, lost 2.9% today. And SK Hynix, Samsung Biologics, Kia Motors all advanced today.
Well, now zooming out, Professor, we heard a minute ago how the IMF is projecting that the global economy will be in a worse state next year. It's lowered its growth forecast for next year to 2.7%. What do you make of the IMF projections, and what's your outlook?
The IMF on Tuesday released a gloomy prediction for the 2023 economy of the world as well as Korea, mainly due to protracted downside risks such as high inflation and cheap currencies against U.S. dollars. The IMF revised its forecast on the 2023 GDP growth of global economy down to 2.7% from its earlier suggestion of 2.9%. It also slashed its outlook on Korean economic growth by 0.1%, predicting that the nation's GDP growth would stay at 2% next year. The IMF raised the possibility that world would see the situation of a strong dollar against other currencies continue, and an additional phase prolonged high growth in general price level in the wake of food and energy prices. It means that it became more important to prioritize management of inflation and job decrease in the middle of carrying out hawkish monetary and fiscal policies.
Right. It seems more and more things going in the wrong direction, Professor. We'll have to leave it there for today, though. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.